Hey folks, Dan Frio here, the rate update. Today I want to talk about refinance. You hear from everybody. You hear on the news, you hear on the radio, you hear on YouTube, you hear on every social media platform, refinance, refinance, refinance. Why? Does it make sense? It doesn't make sense for everybody. It doesn't. It really doesn't. So let's go through why you might want to refinance. So I'm just going to go through a couple of the basics. Then other videos we're doing are going to go really break down these in detail of, when you're looking for a refinance, you want the best rate. How do you shop for the rate? We're going to show you how. Terms. Do we want to do a 30-year term? Do you want to reduce your term? Are you looking to kind of structure around when you're going to retire? We're going to talk to you about that as well. Fees. This is one area where nobody really pays attention. Most people don't. Because I get rate quotes every day. They're like, Dan, this place offered me 2.5. I can't beat 2.5, but let's look at how much it's costing you. Because I've had several of these come in just the past day. People are getting charged $10,000 to get a 2.5 rate. I get you 2.75 at no costs. You'll never recoup that fee in the whole length of the duration of the time you have that mortgage. So that's where you really have to pay attention to, that in there. What's your break-even point? If you're looking to refinance and say, does it make sense? How long does it take you, if you're paying fees, to recoup it? So that's another area we're going to talk about. Then there's other reasons why you might want to refinance, and we have a specific video coming out in the next week about this. The biggest thing is debt consolidation, and we're going to go over that in detail. I have a loan officer of mine named Gus. He's going to really break it down. Because most of the time we have people come back and say, why would I pay off a credit card and put it on a 30-year mortgage? We're going to show you how and why. Another thing is where a lot of people don't really realize you have a home equity loan. Do you realize home equity loans, probably 99% of them are on adjustable rate mortgages? We have the lowest rates in history. Get off of this because the rate's only going to go up. Do you want to, 5-6 years from now, when the economy starts kicking again, inflation kicks in, all the other things start to click in the economy, mortgage rates are going to go up. Would you like it, or could you afford it if your payment went up $300, $400, $500, $600? Probably not. So why would you not capitalize today on where get rid of that ARM and put it into a 30-year fixed rate or any term you want, but fix that rate in. So that's what we want to really talk about today, and I'm going to go through that briefly here in a second. Okay, so now what we want to talk about is the rate. Please, please, please don't get overwhelmed with the rate. Here's what I mean. I'll get calls from people, they're at 4.5, okay? They're like, well, and I quote them 2.875. You know what? I was really wanting 2.5. I'll just wait. What are you waiting for? What are you waiting for? You're at 4.5. You've already put it off long enough. Stop putting it off. If this saves you $250 a month, okay? 2.5, what's that going to save you? $260? You want to keep blowing $250 a month to possibly save $10? That's what you've got to concern yourself on. Term, this is huge. I'm going to give you my feeling on term, and this might contradict from other people and what they tell you. Me personally, I'm doing my own refinance right now. I'm putting my loan back, and I've been in my house, I've been in this loan for about 13 years. I'm going back to a 30-year term. Let me tell you why. The rate that I'm getting on my mortgage is 2.75. So here's my thought behind this. I'm getting money lent to me for 30 years at 2.75, okay? The average market return for investments is approximately 6 to 8%, okay? My refinance is saving me $1,000 a month. So what am I gonna do? Well, I'm gonna start putting money in the market and other investments. There is going to be a downturn. Yeah, there is. But the average return is going to be 6 to 8%. So I can borrow at 2.75, let's round it to 3, and I can get a rate of return at 6 or 8. I can double my return on what I'm paying. Makes sense. Might not make sense for you. You might be like, I just want my house paid off as quick as I can. God bless you, do it. But my feeling is on that. So it's also up to your discretion on what your goals are in life. So we can structure this. You're the boss. I'm the advisor. I can tell you what I would recommend. You're the boss. I'll do whatever you want. Okay? Here's the biggest piece of the puzzle that people miss the boat. Here's a common phrase that I hear all the time. Dan, what's my out-of-pocket expense? I hate that verbiage. Hate it. Because here's what I hear, and here's why they're saying that. Well, I called Quicken, I called Wells Fargo, I called US Bank, I called Guaranteed Rate, Q-Rate, or the Rocket Place, or whatever. They're saying my out-of-pocket expenses are only $250. Okay? I don't care what your out-of-pocket expenses are. What are your total expenses? You're financing those expenses. So not only are you incurring those expenses, you're paying interest on that money. The average closing cost worksheet that I get from the competition is probably in the tune of $3,000 to $5,000 on lender fees. Most of the time, mine, $895. So you're saying, okay, Dan, well, you're giving me a higher rate and less fees. Nope. In most cases, I'm giving you the same rate or lower rate, and I'm giving you lower fees in the tune of $2,000 to $3,000. So that's why you really have to compare and shop around. And please, at least give us an at-bat is what I call it. Okay, your break-even point. This is kind of tough, and I won't go through that in great detail. Basically, we want to look at it as how much is it costing you? In most of my cases, you're looking at maybe $1,500 to $2,000 when you add in all the costs totally on the loan. In most cases, your break-even point is going to be maybe a year. This is a really hard one to figure out, but the best way I can do it is if you give me a quote that you already have, I can compare, here's your break even with them and here's with me. So I can't really say, okay, if you're going from a 20-year to a 30-year, what's your break even? There really is none, because you're going back to a 30-year term and your monthly payment is going down dramatically. So this is a tough one to go through. Now the bottom piece. And like I explained earlier, I'm going to have a video coming out in the next few days really detailing debt consolidation, and you'll be amazed on how you could take a 20-year term that you have right now, pay off all your debt, and we're going to pay off all that debt plus your mortgage, and we're going to cut it to 15 years. How? Stay tuned. We're going to show you how to do that. The next thing is ARMs to a fixed. If you're on an ARM, please get off of it. The rate, we're at the lowest possible rates in history. They're only going up. So that's all I got to say about that. So hopefully you like what you see. If you want your private one-on-one consultation from me, please give me a call. You can find me at therateupdate.com. I won't spell it all out, but therateupdate.com, or give us a call at 844-775-LOAN. That's 844-775-5626. God bless. Take care. See you soon.